This is Orbex Market Insights from your host and analyst Stavros Tousıos. Good morning. Today is the last day of trading for the week, and I wanted to give you my insights on dollar CAD as we expect some data that are going to have an impact on all Canadian related pairs. Canada's core retail sales and standard retail sales. Analysts foresee another decline on the core figures, but this time it's at better than November's release to 0.1%. And also standard retail sales are forecasted to come out as 0, which is a better figure than the previous report. Now, Loonie has weakened marginally on early Thursday on softer crude oil numbers, as EIA reported a build of 3.7 million barrels for the week ending February 15, a number that is much higher than the forecasted figure of 3 million. Later in the session, the Canadian dollar came under renewed pressures following Mr. Poloz's speech at the Chamber of Commerce, as the government continued to signal a more gradual approach to rate hikes and said that the path to neutralization has become highly uncertain. Now, on the dollar CAD on our charts, I want to start with the daily chart, as always. Dollar CAD was trading below the psychological 132 barrier before yesterday, but only temporarily, as the 200 moving average rejected the bearish move. Now, following the rejection, prices increased around 0.3% and reached an intraday high of 1.3231. Now, Loonie price action suggests that the pair could move higher ahead of the release, as we can see an engulfing pattern, and that follows a bullish diversion signal. So it makes the bullish case a little bit stronger. Okay, but note that yesterday's upside move is expected to be short-lived and just for the short term, as most traders are likely to wait for the important data to come out before making any sort of directional moves. So down on the 4-hour chart, let me just grab the pen here. Down on the 4-hour chart, we can see bulls being rejected by the 200 moving average from the upside now, okay, and near 1.3240. This is our level. That level also comes in confluence with the upper barrier of the descending trend line, okay, and also is set near a strong support zone that has previously been reached and now could actually become a resistance, as we see prices started moving a little bit lower. Now, I want to move down to the 1-hour chart just to see the picture on a bit of short term. And here we see that prices look a little bit bullish. Okay, it's very easy to spot formation on the candlesticks over here. Okay, let me just get the highlighter again. So we have a number of bullish candles over here, and prices coming up to the Fibonacci retracement of 1.3242. Now, this level, we can see that we have received a rejection over here, and that comes because we can see a short-term bearish signal both on the RSI and the MACD indicators, and that subsequently has taken prices down to the previous low of 1.3220. Okay, now in case this level breaks, we could see prices moving down to 1.3206, where we see a previous resistance level. So in case this level holds, we will see the prices going higher, maybe creating a range until the data come out, or even maybe just in case we see some very big increases on the dollar prices can break above this level, heading towards 1.3263. Now, of course, depending on the results of the data after the release, we could expect prices to move all the way up to reach this sort of trend line on the top side. In case the data are good for the Canadian dollar, then dollar CAD will move all the way down. It could actually reach back this support level, or go a little bit lower from the first zone to reach a level near 1.32, which is also a psychological level. I want to thank you for watching our daily video for one more day and wish you to have a nice weekend. Feel free to subscribe to our channel and stay updated about the markets, and also visit our blog where we cover the latest news, publish trading ideas, and provide all the necessary tools to serve you responsibly.